Let's have some fun. Okay. I've been doing these events for a long time, and normally, I was just telling Laura, the normal consistent run rate is like 75% from registered to attended. I think it's about 100% here, so thank you all for coming. I'm excited to share something with you guys that I believe will bring some value to you. And this has been a long time in the making, and I'd like to take you through kind of the story of how we got here. So it's December 2003. I have sold my tech startup consulting web marketing company about a year before, and I'm working on a new company with a friend of mine, 1-year-old daughter, and my wife got pregnant with our second child sometime along that summer. And he was due to be born in April of 2004. And we were living on some of our savings and her dental hygienist income. And I knew that she was going out on maternity leave in March, and our only income stream was going kaput. So I talked to my friend. I said, we either have to get funded or I've got to figure something out so that by March I'm hopefully making some kind of paycheck somewhere or something. Maybe a bartender, maybe a stockbroker, maybe a real estate agent, because that's so easy, right? Just jump in and start selling homes like Gideon over here. But my cousin, who'd been in the mortgage business for, I think, 4 or 5 years at that point, she'd done our transaction for us, and when we bought our first house in 2000, kept telling me to come in and check out her office. She thought I'd be really good as a loan officer, and it sounded like death to me. Sitting in the back office of some bank, shuffling papers and looking at loan applications, paper. I've been a salesperson all my life, and I've been a student of life, and all of my experiences have formed all of my education, and the idea of sitting in an office and looking at paperwork is just no fun. So, but she broke me down eventually and said, just come in and check it out. So I went into her office in Walnut Creek, and within a day or two, I was blown away. I fell in love with the business. It's nothing like what I thought it was. It's fast-paced. It's creative. I love doing puzzles. Everybody brings their own Scrabble jigsaw puzzle piece to the table, and you have to kind of assemble it around them. There were a ton of loan products at that time, and the party was on. It was 2004. I don't know if you guys have seen Wolf of Wall Street, but home prices were soaring. Everybody was drunk. Everybody's having a great time, and half the office would never come back from lunch. And there were wholesale reps coming around, taking us out to lunch all the time. There were even escrow people, Effie and Vanjie, who were taking us out to lunch and on ski buses up to Lake Tahoe. This is before the Department of Insurance slammed down on the title and escrow industry. And it was fun, and it was exciting, and some of the natural skills that I'd assembled in my life, I was able to apply almost immediately. The sales, I liked speaking, I loved talking to people. I didn't know anything about loans, but in those days you didn't need to. It was a lot of stated income, it was a lot of this and that, and I never got into the super exotic loans and everything, but the actual doing of the loan was pretty easy. And what I identified almost immediately is that my business is very similar to your business. There's basically these 3 zones. One is the sales part, right? People have to know you exist, they have to know what you do, and you can do that on Instagram, door knocking, hold events, do whatever you do to let people know that you're out there. Then you get a client, now you have to do the actual transaction, right? So you have to put the loan together, you have to get it through, close on time and all that. And the third component is keeping up with your past closed clients so that you don't have to do so much of number 1. So you get referrals from all the people that you've closed over all the years, and so you can host events and have client appreciation parties and do all that stuff. Well, I had nothing in 3. I didn't need to know anything in 2 at that time, and so my whole life was just running around. And I got my license in April of 2004 and immediately decided that this brokerage I was at was actually a great place to get started working. And so I made an appointment with the office manager, Dave, and said, I'd like to talk to you about possibly working here. He said, great, come in, 10 o'clock in the morning. I went in, I'd got myself all ready. Back in those days, I wore a suit and tie every day. And that morning, I put on my Givenchy tie and put my resume in my briefcase and walked into his office. And he spun around in his chair. And I looked right into his bloodshot eyes and realized that he's stoned out of his mind. And he proceeded to speak directly to me for the next 30 minutes. And said that we're all a bunch of losers in this business. Nobody dreams of being a mortgage broker. We've all failed at something and landed here. And I'd be surprised if you were in this business 6 months from now. And I said, okay. And he said, and you're hired. And I said, okay. Didn't ask me a single question. Didn't ask if I just got out of jail, have I committed any financial fraud, background check, nothing. I'm hired, I'm in. So I jumped in the deep end of the pool, and the best place to learn, I thought, was with the top producing guy in the office. And I went and sat in his office. His name was Rick, extremely gregarious, very charismatic, very outgoing, knowledgeable about loans. And I just sat there with my yellow pad in his office, taking notes, listening to him talk to people on the phone. And he took me out to lunch one day and said, the key to this business, FM, is the real estate agent is your number one business partner. And so I took that to heart. And he said, you got to get as many realtors as you can. And I'm like, get realtors? I'm like, how do I get you guys, right? So I decided that the way I get you is by coming to your office in the morning with donuts. Walking into your open house, only to see your face drop to sadness when you realize I'm not a buyer, I'm a mortgage guy. Walking into your sales events and trying to get you with all the other mortgage brokers who are there, like sharks trying to eat you guys. So that was the game, and that's how it was until financial crisis. And I did a fair amount of loans when I first jumped in. I was more successful than most, thank goodness. And all of a sudden, everything changed. Two big things happened for me in 2007, 2008. One is another person joined our office. His name was Eric. Kelly knows Eric. Completely different type of loan officer and a completely different way of doing a lot of loans. He never went to lunch with anyone. He never left the office. He was a guideline guru. He did all of his own stuff. He wouldn't even trust his file to a processor. So he did everything himself. He knew all the guidelines. And he became, and still is, both of these guys are, great friends of mine. And when the financial crisis hit and all of those crazy loan options went away, then all of a sudden you had to know the guidelines. And that's when I doubled down and I dug in. And you had to know compliance, you had to know everything. The whole world of mortgage changed. And there were a lot of my colleagues who were kicking and screaming. I can't believe they're asking for pay stubs. I can't believe they want bank statements. This is BS. This is a joke. The underwriter's a jerk. None of that for me. I doubled down, I read the guidelines, I learned them. I gave myself a PhD in mortgage, basically. And I started to be able to do loans that others couldn't. And my phone started to ring from some of you in this room, actually. We've known each other quite some time, some of us. And you guys were calling me panicked. Hey, we're supposed to close tomorrow. The lender doesn't even have a phone number that works anymore. They're literally out of business. It's happened. We're closing tomorrow, right? Or the loan officer said we were good to go 3 days ago. Now all of a sudden I can't close the loan. Right? Nope, we're not approved. They missed one document or something, or they didn't know how to structure an FHA loan. In 2006, there were 3 FHA loans done in the entire Bay Area. And by 2009, it had grown to over 20% of the overall volume, right? So, and the reason was in 2006, the FHA loan limit was somewhere around 250 grand or so. It was very low. But they, you know, after 2008, they opened everything up. So you had to know how to do these loans. And I learned how to do these loans. And that was a really critical time for me. So fast forward from that, once that happened, my business basically tripled because a lot of my competition had left the market. And I enjoyed a fair amount of success as we kept going. And I found myself at the third person who really was an aha moment for me. I went to, this is in 2022, just 3 years ago, and I was still operating under the same premise. I had spent my entire post-financial crisis life working on the loan process. Because it's no good, if you guys send me a client and we don't close on time, what happens? Does anybody here know any other loan officers in the area, right? They're probably calling on you right now as you sit here and leaving messages on your phone. Watch out on Mondays, by the way. There's this company called The Core that is this loan officer sales training, and they say that every Monday you have to call 40 real estate agents to check in with them and see how their weekend was and what blah, blah, blah. So turn your phones off on Mondays. I've never subscribed to any of that, but I have learned a little bits and pieces of everything along the way. So not only did I get my PhD in loan, I got my PhD in sales and dug down deep on everything having to do with actually doing the loan itself. And for the first time in my career, I actually knew what I was talking about. So it went from like, hey, I'm charming, work with me, da 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 da, to I can actually answer loan questions. And now I've seen thousands of loan files. And in 2022, I was lucky enough to be invited to the top 100 loan officers in the country dinner thing in Las Vegas. It was a big event. It culminated at dinner at Nobu. And of all the 100 people that I was sitting next to, I happened to be sitting right next to this guy named Matt Weaver, who does more units than anybody else in the country, not just across country, but anybody. And he's from Florida, South Florida, and really great guy. And somewhere between the edamame and the California rolls in there, I got the courage to lean over to him and say, so how do you do it, right? I'm doing 15, 20 loans a month, and I'm working a lot, 7 days a week, myself personally. It's stressful. Sometimes I can't get back to everybody. And how are you doing 100 loans a month? You must be putting them in somebody else's name or something. And he proceeded to give me a lecture, Q&A, education on systems, structure, scripted process, which I really took to heart. And he continues to talk to me on at least once every couple weeks basis to this day. And at the end of that conversation, he said, and let me ask you this, FM, who's your customer? And I said, my customer is the borrower. And he said, no, that's your client. Your customer is the real estate agent. And that blew my mind, because instantly I knew what he was talking about from what I knew in sales. It's a complete paradigm shift in our relationship. Up until then, you guys were my business partner. Up until then, I was responding to what you needed, or we'd go to lunch and we'd talk about what you're going to need. When you're my customer, I'm anticipating what your needs are, and I'm trying to deliver them ahead of time, okay? Up until that moment, I was the JW Marriott. I was good. It's a great place to stay. Since then, we've tried to become the Ritz-Carlton. We put chocolate on your pillow. There's slippers by your bed. You didn't ask for it, but it's there. And the foundation of that structure, of that philosophy, is what's led to what we have right now, which is what we call the 4 pillars of value that we offer to our real estate agents. And pillar 4 is called growing together. And out of that growing together is the new product, I want to call it, that I'm offering to you guys today that we're releasing. We came up with it a year ago. This has taken 1 year to finally be able to roll out and execute, because it required us training members of our team to do things in a very specific way. And because it involves a lot of client interaction, there was a lot of teamwork and scripting and a lot of effort that's gone into building this thing. And so I'm excited to show it to you. So we call it winning by referral. So the execution is the key. And this is, again, this changed what I do from a business model standpoint. How many days would we like to just have 5 of us running around there doing our thing, right? That's what Matt taught me how to do. By following a very specific scripted process, every member of my team delivers the same exact experience to clients every time. What I learned after doing thousands of loans is I'm basically having a lot of the same conversations with people, right? Thank you for your documents. What's an impound account? Da-da-da-da-da. When are my property taxes due? So what we have been able to, and I would say things great. My team, when I had assistants for those other 10 years, would sometimes just kind of go and do whatever the best they could. It took a long time. It's taken years to write down and think about how would I answer this question in the perfect way that I would do it every time. And we've tried to fill that in with the execution. And if you think about it, any successful business follows a scripted process, okay? There's no way that you can go to your favorite restaurant and be at the whims of the chef who decided, tonight I'm gonna add a little more salt. Or tonight I'm gonna put more water in the sauce and make it runnier. Or tonight I'm gonna add some butter. You want consistency, right? Any successful business follows a scripted process. And by scripted, I don't mean Macbeth, Romeo and Juliet, where everybody has to say the same exact words verbatim. But they have to follow the process and hit the touch points so that our customers, you guys, are getting the service that you deserve, all right? So our objective here with our Winning by Referrals program is very simple. For every referral you send to us, our goal over the next 12 months is to send 3 back to you, okay? And if you send us 3, our goal is to send you 9. If you send us 4, our goal is to send you 12, and so on and so on. How do we do this? We do this by working your database for you, okay? How many people here ask for a referral after the transaction? A couple of you. That's the key. People don't know how you get your business. I learned this by asking my clients. They thought the phone just rings at Cross Country Mortgage and I eventually get it's my turn to get somebody, like I work at Wells Fargo. People don't know how you get your business. They don't know if your broker gives you business, if you happen to know someone, whatever. So we have to educate them that what we would like is a referral. And we do this throughout the process. A lot of you feel a little timid about engaging your clients and asking because you think it sounds what? Cheesy, pushy, salesy. Guess what? You're in sales. I hate to tell you. You're in the horizontal of real estate. You're in the vertical of sales, all of you, okay? Just like me. I'm in the horizontal of mortgage, in the vertical of sales. And if you feel it's not you, if you feel it's uncomfortable, we have trained our staff to ask clients for referrals. Now, is this gonna be pushy or cheesy? Oh my God, I don't wanna refer people, they're gonna be bombarded. No, we celebrate our wins, and let me walk you through how this works. So, our 4 pillars of value is the foundational offering for your success. Growing together is where the referral engine comes from. Number 1 is our pre-approval process. This has been something that's been developed over time to be an asset for you guys. It's not just a formality, okay? A lot of lenders view the pre-approval as a formality. What do I mean by that? You call someone and say, hey, I want you to talk to someone. They might want to buy in August. Okay, great. Introduce me to them in July and we'll start to get the paperwork together. Right? Have you heard that? Or you call somebody and they don't answer. They're not available. We're open 7 days a week from 8 a.m. to 8 p.m. If someone calls my phone right now or at 7:30 tonight or at 10 o'clock on Saturday, somebody's going to answer. It's either going to be me or somebody on my team. We stagger our staff to be able to serve you. Why am I open 8 a.m. to 8 p.m.? Because my customer is. We're tailoring our business around our customer, you guys. Last night, I sent a pre-approval letter at 7:45 because somebody was meeting with a borrower at that time and needed me, okay? So we've made this The hours that we're open match what our customers' hours are. We are fully staffed. It's not an answering service. It's not just me sitting by the pool or whatever, taking your call and saying, yeah, I'll get to someone. We're fully staffed. Someone who answers the phone is ready to take an application that minute. We start with a simple 10-minute application process on the phone. For years, I've been sending people to an online application, okay? We want to limit the barriers of anybody who's even remotely interested in buying a house from getting pre-approved. And what I was starting to realize is that online application, convenient as it might be, is a bit of a barrier to entry, because guess what? I send the link, I'm on this page, I can't figure out what to put in this box. Or I'm in this thing, it won't let me go any further until I fill this out, I don't know what to say. Or I get a text message, hey, I'm trying to fill out your application, but it won't load. So we said, forget it. We take 10-minute loan application. It's pretty simple. We don't get into a lot of detail then. There's plenty of time for that later during the loan consultation. We immediately just get the core items that we need in a quick, easy, simple 10-minute application. What does that do? It gets the borrower in our funnel. It gets us to know the borrower and ask the right question and ask for the right documents. Because even when I send the online application and they fill it out, a name comes into my system, and now my setup team looks at it, and they're going to take a shot with some documents. And all of a sudden, documents come in, and they say, oh, you know what? I need some extra stuff here. I'm going to send this now. Now I know, oh, you're divorced? I need your divorce decree. Oh, you own 2 houses? I need the mortgage statements for those. Oh, you're self-employed in addition to your W-2 job? Go ahead and send me the taxes. I can get all that right after the application, so we're not bumbling with each other back and forth. That makes it better for you, because this system is designed, our goal here is to preserve what we believe to be your most valuable asset, which is your time, okay? At the culmination of this, they get fully pre-underwritten within 4 to 6 hours. What does this mean? Saturday at 10 o'clock, you're at an open house. Somebody walks in, they want to get pre-approved. You put me on a group text with them, I'll call them, or somebody on my team will. We'll take a 10-minute application, we'll request documents. They can go home and upload those documents around noon. By 5 o'clock, 6 o'clock that night, they're underwritten and approved and ready to make an offer. We're fully staffed 7 days a week, okay? Does that work? Good? All right. Then we go to a detailed home buyer consultation. This is where we have our Zoom meeting, and people who work with me, you've all seen my spreadsheets and all that. We create a tool where someone can now run the numbers for themselves. We walk them through it. We give them the tools they need to make a decision, and we copy you on the email with their max approval amount so you're in the loop. The other thing that my customer, you guys, was always asking for is communication, right? Can I just get some communication? So between live and automated, when anything happens on the file, you're communicated with. Is that true? Absolutely. There we go. We have a devout user right here. So when that application comes in, you guys get a text. Just got the application, requested doc. Documents in, everything's in, we're working on the pre-approval. They're pre-approved and we had the loan consultation. You guys get copied on the spreadsheet. They're pre-approved. Max loan amount is $2.3 million. Based on the conversation, it sounds like 1.8 is more in their budget. They're good to go. Go find a house, all right? Anytime you guys have questions, you can ping us and we'll answer. So that's step one. Now this is where the first referral ask also comes in, okay? Anytime there's good news and we celebrate, we ask for a referral for you. So do you have any other questions? Congratulations, you're fully underwritten and approved. No, that was easy. Great. I'm so glad that you found our process to be easy and simple. And now that you're pre-approved and actually looking for a home, you know how the law of attraction works. You're probably going to bump into 100 other people who are looking for homes or looking to sell their home. If you run into anybody who's looking to sell their house or purchase a home, we would love an introduction. No problem. You guys have been great. That sounds great. Super. What we also do is we get the All About You form during the consultation as well. What is that? That's another tool that we heard that you guys could use. People started asking me, hey, when these guys fill out the application, can you let us know when their birthday is or information that you get from them? Sure. So we formalized it into our scripted process. Now every applicant we ask, what are your kids' names? What are their ages? Do you have any pets? What are their breeds? What kind of dog or cat do you have? What's your favorite restaurant in the area? Do you like wine, beer, liquor? Do you like coffee or tea? Do you give to any charities? Are you a huge sports fan? If they give us the information, and about 70% do, we'll get the information and share it with you. That way, when you want to give them a closing gift, you can hit the bullseye, okay? Again, this was an online form until about 3 weeks ago, and a lot of people weren't filling out the online form, and I was like a little queasy about asking this stuff because we've just talked about their finances, but we have a nice little segue into it, scripted, not word for word, but it's basically, I know everything about you from a financial standpoint. If it's okay, I'd like to find out a little bit about you and your family personally. And most people are very open to it when you ask that way versus filling out an online form. And it actually transforms this meeting from this kind of black and white financial thing into a really fun event. You know, people really like sharing that information about themselves. So we share the All About You form. We've asked for a referral once. Now you guys find a house that you want to move on. This is element 2 of our value proposition, and we've created, again, a process around this. And I beg you to use the process. Some people just say, hey, can you send me a pre-approval letter for 1.7? But it'd be great if we talk about it ahead. Oh, yeah, here's our pre-approval team. My team has grown over the years. 5 years ago, it was me and one assistant. Now there's about a dozen people on my team, all with experience. It's taken me about 25, 30 people just to get to the 12 people I have now. Everybody looks great on a resume. Everybody's wonderful in a job application. When you put them into the vice grip blender machine of mortgage and real estate and having to deal with the compression of time that's required and the speed and accuracy that's required, not everybody makes it, but we've got really great people here. This is our scripted pre-approval process. Every single member of the team is color-coded in here. They all know what they're supposed to do. I'm very process-oriented and everything. So it was an idea in my head 10 years ago, and it's taken a long time to get it all mapped out. Every one of these boxes has training associated with it that people have gone through. What you do exactly at that stage. It's not up to the whims of my assistant like it used to be. So pillar 2 is our offer process. We call it our 7 elements of a winning offer. Number 1, they're fully underwritten and approved. We can close in 14 days with no loan contingency, barring any property issues, okay? We want to beat everybody else on terms. That's our goal. So our offer process is designed to eliminate buyer competition, and it's also designed to maximize value for our borrower in negotiating terms. Because when we can beat everybody else in terms, it gives you guys a little bit of leeway to maybe ask for that seller credit for points to buy the rate down to 6%, if that's the case, right? It all starts with our price to win strategy. That's step 1. And this is where we need communication, okay? You guys have looked at comps. You've called the listing agent. You've got an idea of what the winning offer might be, and you close your eyes, ask me for a pre-approval letter, and shoot for it. When the borrower comes back to you and says, look, I know you're telling me 1.6 is the magic number. I don't want to go over 1.55. My monthly payment's too high. That's when you call us, okay? An example of this is this right here. I hope you can all see it in the back and everything. This is a scenario that we actually put together a couple of months ago for someone. So this is one of these spreadsheets. This is the base scenario here for this particular borrower. What are their criteria? I don't want a monthly payment over $5,000 a month. That was number 1, super important. Number 2, I have $300,000 between my money and the gift from my parents for cash to close, okay? We worked that backwards. Even though they're approved up to $9,600 a month, they don't want to go over $5,000 a month. We work it backwards, and that means an $870,000 max offer price. $5,000 a month, $300K cash to close. I get the call from buyer's agent. We put our offer in. They're countering us. They said we can get it if we go to $900. Well, they didn't want the extra $500 a month. They were going to say no. So she said, FM, is there any way that you can get these guys to possibly go to 900? I said, let me see what I can do. So we had a Zoom meeting, and we started playing with the points and a seller credit. We didn't have any extra cash to pay for the points ourselves, okay? So what we did was we came over here to the far right, 4 points, We offered $933. We kept our down payment at $280. Our monthly payment actually went down from $870, okay? And our cash to close remained exactly $301. We got a $33,000 seller credit, $900,000 to the seller. We're in contract, okay? The people that bid $880, $890 were out. We were in at $900. So this is our price to win strategy in action, and this is something we can do with any borrower. Key component here, will it appraise for $933? There were some 940s and 50s. There were a couple of 850s, 860s. It was in the range, but we had a big down payment in this case, so we weren't that worried about it, okay? We can always take on mortgage insurance, stuff like that. There's all kinds of things we discuss when we're doing price to win, but this is important to really collaborate with us when we're trying to get people into contract. Offers accepted, and that, well, last two most important things. I get personally involved in every transaction. So I will call the listing agent. I will let them know we're fully underwritten and approved, and everybody says, okay, Ilan, you're making an offer at 1 o'clock. When do you want me to call the listing agent? 1:30. That's what everybody says, and that's not a bad answer. Let me suggest to you that that is the worst time for me to call, okay? Because you're getting bombarded. Nobody wants me to like show the cards before the offer goes in and stuff like that, right? So I'm not going to talk about the price, the days to close, or anything like that. When I call the listing agent at about 10:30, 11 in the morning and say there's an offer coming in from Ilan Penson of Red Oak Realty this afternoon on your property, I believe, because somebody pulls out at the last minute. And I just want you to know that the file has been fully underwritten and approved. We have our own local appraisal management company, and we shouldn't have any problems at all. And by the way, are there any issues you can think of with the property? And the listing agent will usually say, no, it's a wonderful place. Sometimes they'll say, yeah, I have an unpermitted thing in the basement with a kitchen in it or something. It's good for us to know, right? So they always appreciate the advance call. They don't have to go searching for a lender now when they've got 7 offers sitting in front of them. And they really like the one that reached out. They always say, this is great. Thank you for proactively reaching out. So that is an important component of this. And then when your offer actually does go in at 1 o'clock, copy me on the email because we have another email that they can share with their seller. We send an email that the listing agent is designed to share with their seller when they're considering who they want to work with, buyer-lender combo, okay? It's information for them about the certainty. We like to call ourselves merchants of certainty. We're fully underwritten and approved. We know we're going to close, and we're going to get the job done. Now, offer accepted. This slides us over from Pillar 2 into Pillar 3. This is our 60-minute mortgage. This is another product that we've created for you guys because what I was hearing from my agents, especially at the end when we're trying to document cash to close and closing, is I just heard from our buyer, they're really frustrated. You've asked for the same thing 5 times. Anybody hear that ever? Lenders asking for the same thing over and over, right? So before we get to that, we have our offer acceptance meeting. We slide into our 60-minute mortgage, and we do update the file and send a request for documents. And then we ask for a 30-minute Zoom meeting where our client is in front of their computer and can focus on us for just 30 minutes. We're going to review everything. We wanted updated bank statements. They sent in 6 out of the 7 pages. The pay stub they uploaded was a little bit smudgy because they'd put it on their kitchen counter and taken a picture with their iPhone. So we asked them on the Zoom meeting to get us everything we need, upload it right there when we're on the meeting together. We review it during the meeting, and now we have everything we need to go to underwriting, okay? This is the goal. This is not always 100%. Some people don't have time or don't want to get on Zoom, but about 80% of the time we're successful in having our initial 30-minute meeting and getting everything we need from somebody right on that meeting. What's the other side of this? Here's a needs list. Great. Congratulations, you're in contract. Here's a needs list. Here's my documents. I just did it, 5 o'clock when I got off of work. We review it the next day. Oh, 7 out of the 8 things I asked were good. You got to retry number 8. Okay, I'll do it when I get out of work. Didn't work. You got into contract Monday. We're ready to submit Thursday, right? On a 14-day close, that's death. That is a late closing waiting to happen and frustration for everybody. This, within the first 24 hours, we want to get on the horn with people. We want to get everything we need and get the file moving, okay? At the end of this meeting, congratulations again on getting into contract. We're so excited for you. I know, we're thrilled. I can't believe we got it. I know, we're excited to be part of your team that helped you win. And if you have any friends, family, coworkers who want to win, who think they're getting in the real estate buying or selling game and want this kind of advantage, we would love an introduction. You got it. They're excited at that moment. They're not objecting, okay? Trust me. That's the moment that we ask for our second referral ask right there. Now, we've got their kids' information from before. We've asked their birthdays and all that. And when this file goes to processing, we send an age-appropriate gift from you and us to the house where they currently live, and it's usually a book. It's for the 5 to 10 year age. It's this National Geographic book about animals. There's one for the 10 to 13-ish age. For the sub-teens, we send a little handyman book about how to fix a house, saying, congratulations, I understand your family's about to build a house. Because what do teenagers love more than anything? No more than their parents, right? Is that right? I know more than you. I know I'm getting it, right? I have a 22-year-old, and she knows way more than me, allegedly. So we send this and say, if you really want to show your parents how to do the plumbing and electrical and whatever, here's a little handyman, little reference guide. So the second part of our 60-minute mortgage process is that once we get the approval, one more 30-minute Zoom meeting with the clients to get what we need. 90% of the time, that's just cash to close. At the initial meeting, everything was in stocks, mutual funds, some checking here, getting a gift from my mom over there. Now we got to bring it all together for the final approval, cash to close. One more meeting, we show the liquidation, the transfer. This was a common source of frustration. You know, if you take a screenshot of your Chase account transferring to your B of A, I can't use it. You have to print it to PDF because it's got to have the little URL at the bottom of the page or the underwriters won't take it. There's all kinds of quirky stuff like that that results in a lot of frustration for people. We take that out of the game now. We try to make it quick, easy, get to closing, all right? So we send the personalized gift, we do the referral ask, and when we're cleared to close, my client concierge team will again call the client. Congratulations, I understand you're signing your doc soon. Do you guys have a move-in date? Yeah, we're supposed to move in next Friday. Super. I'm going to confirm with you next Thursday because we want to send you guys 2 large pizzas on your move day when you're moving in. And we do that on every transaction starting again. This whole, you're the first ones to see all this. This all just rolled, okay? And we send this to them at closing. In addition, we send them a gift as well at that point. Our contract to close team is the transaction management is right now Madison and Amanda. The operations team is over here. And that brings us to pillar 4, which is growing together. So this is where we're constantly evolving. This is where we're taking feedback from you and trying to see what do you need and what can we do to anticipate your needs, okay? So you let us know what it is. This one just rolled. The referral engine just rolled. Again, the goal for every single referral you send to us over the next 12 months, we send 3 back to you. Why do I say 12 months? Because our relationship with the borrower, our scripted process does not end at funding and when the keys are handed off. We check in 3 months later. Are you all set up with your servicing? Have you been making your mortgage payments? Is everything okay? How's the house? Talk about supplemental tax bills at that time. You want to keep your eyes open for that. This is what it's going to be. This is how we can, you're going to expect to get this. This is what it means. About 6 months later, we check in with them. Now they've been in the house for several months. How's everything going? Do you want to do any improvements to the house? Are you thinking of, do you need an equity line maybe? You want to redo the kitchen, whatever, now that you've lived in it. We have that kind of conversation. And then 11 months afterward, we send an appointment reminder for their annual mortgage review. And this one's really important. It's a great touch point. We get on a meeting with our clients and we ask them, what's changed in your life? Oh, you had a baby. You had twins, triplets. Wow, okay. Or your kids graduated and they're off to college. Now you've got these extra bedrooms. Or your mom got really sick and she needs to move in and you're thinking about building an ADU. What's changed in your life, right? What's changed in your credit? You're getting crippled by credit card debt or you're not. What's changed in your assets, your income? You just started a new job. We check in all three of these categories. And then we ask them, now that you've got this house, what are your real estate goals in the next 1 to 3 years? What are your real estate goals in the next 3 to 5 years? Well, I'd love to get a second home up in Tahoe. Or, yeah, we just had the baby. I think in the next 3 to 5 years, we're going to need a bigger place. We get all of this information and we share it with you. It's 2 reminders for you. One is that they exist. You would be surprised how many times when I send this, like, oh my God, that's right, Brad and Linda, totally forgot. But it gives you a chance to remember that they're there and that it's a great touch point for you guys to reach out to them. And the other is it's the 1-year anniversary of the home and you have all this information now, right? So you have a reason to call. We also ask for the referral at that time, right? So that's another time where we say, so glad to have helped you, excited about all the changes in your life. If you have any friends, family, or coworkers who are looking to sell a house or buy a house, we'd love an introduction. So this is the process right here. The green are our wow moments. The brown, I can't read it from back there, but the brown are the referral asks, and this is only during the transaction. It goes on afterwards. So there's 5 asks, and if you ask somebody 5 times right away, that's annoying. Would you guys object to your database being worked by us? Yes? No? You would object? Okay. So that's a technique that I just learned from this FBI interrogator guy about 6 months ago. When you are asking, ask for no. It's very tricky. So our agent success team, which is our marketing, our post-close, everybody is these guys right here. The great Laura Tabshirani sitting in the back of the room who set this up. Let's give her a hand. We've also created this website. It's a self-service website for you guys, winningwithfmz.com. We try to pack this thing with as many realtor tools as we can, okay? So you've got a listing and you want to have a conversation with the seller about a price reduction because it's been on the market for 45 days. We have a script there where you can use it to talk about 2-1 buy downs or giving points as a credit versus a price reduction, okay? We've got a portal here where you can order listing flyers for any properties that you have that you're listing. We've got scripts that you can use with buyers when you're talking about 2-1 buy down and stuff like that. Or you can just introduce them to us and we'll do it. But if you need any help like that, all that stuff is on the site here. What I was just talking about is our Sell Like the Builders program. So after thousands of transactions, tens of thousands, however many millions, builders have the data and they never do a price reduction. They always do credits. Why is that? Because the fundamental gap in real estate is that sellers are price-driven and buyers are payment-driven. And our job is to bridge that gap and turn it into a transaction, right? You saw how it worked with that 870 going up to 900. It's the same thing when you have a listing. Your natural inclination, if you're not thinking this way, is I've got a house that's been listed for $1 million and it's just hanging out there. I've got to talk to the seller about a price reduction. I think I'm going to drop it $50,000 to $950 to get some action going, okay? So this is what it means down here net to the seller, $1 million down to $950. This is what it means for the buyer. It means that you're going from a $5,300 mortgage to about a $5,000 mortgage. Not bad, picking up $300. But what if we had a different conversation? If we knew that the most important thing to the buyer is payment and the most important thing to the seller is the net amount in their pocket. And we bombard them with all these numbers. So over here is a permanent buy down where you're offering 2 points. We're going to keep that price at $1 million, but we're going to offer a credit of $16,000, not $50K, 16 grand The buyer, the seller, instead of netting $950, gets $984, and the payment for the buyer is actually lower than if you gave him $50,000. And that's the most important thing. Give him 3 points if you want to make it really juicy. You're still only giving up 24, half of what you were going to. And that $300 savings is now doubled to $600 for the buyer. Much more likely to act if you're giving them $600 a month versus $3, and you're getting the seller double what you were about to give up. Or you could offer a temporary buy down, and you could market this saying, hey, don't have a 7% rate right now. Your rate next year is 5%. Your payment for the next year is $4,200 instead of $53. It's over $1,000 off for the buyer. And what you're asking the seller to contribute is only 18 grand. So now our net's 980 instead of 950, okay? I can help you guys with this. I helped an agent, I don't know, what was it, 3-4 weeks ago. I presented this, she called me, she said, I've got something sitting. We changed the marketing, we offered the buy down, it got the property into contract, all right? It works. Condos. Condos are trouble right now for a lot of reasons. I heard the big sigh in the room. Oh, condos. Condos. I know. When I hear it, I feel yucky too. So what do we do to get ahead of it? I heard your pain. I'm trying to help you. All right? You're my customer. I want to anticipate your needs. Don't get into contract, close your eyes, cross your fingers, and pray. That's not an effective winning strategy. All right? We have fmzcondo@ccm.com. Send us the property address, the HOA name, the master insurance policy, link to condo docs if it's your listing. If it's not your listing, if you happen to have a link before we put the offer in, get us that information. They prioritize active live files on our condo team first, okay? So it's not the usual 24, 48 hours. So I need some time on this, you guys. Like when you're talking to a condo seller about a potential listing, get me all this information. We'll let you know if the condo's approved or not. The first check is really easy. I look on the FHA, Fannie Mae, Freddie Mac approved or not approved list. If it's on the approved list, great. That's a big initial green light. When was it approved? Is it going to still be approved? All that. If it's on the not approved list, we can immediately start looking for a solution. It doesn't mean you have to go to the market and ask for an all-cash buyer, okay? It means that you can go with a non-warrantable solution. We have all kinds of lending options, but the rate might be higher, and there might be points. So instead of 7%, no points for a typical condo, now we're talking 7.5% with 1.5 points on a non-warrantable deal. Why so expensive? Because it's riskier for the lender, okay? So they're gonna price in the risk. So what do you talk to your seller about? You have a $800,000 condo, someone's gonna come in 10% down, loan amount around 700K-ish. I think what we might have to entice people with, because it's non-warrantable, I've got a lending solution, but it's gonna be about 10 grand in points and maybe another 10 grand or so to get them back down to what their conventional interest rate is so we can compete with the other condos that are warrantable. So let's talk to the seller right now about offering a $20,000 credit. Keep it at $800,000, but we're going to offer a $20,000 credit to the seller for closing costs so that that non-warrantable transaction is the exact same rate and terms as a conventional warrantable transaction, okay? This is very hard to do in contract when your offer's been accepted and expectations are set. You get to us early, we can have that conversation all together, have a solution in place. And when we have it, you definitely can't read this, but this is our MLS compliant language. It says this condominium and its association financials have been reviewed by the FMZ team. It's eligible for financing. There's a lot of blah, blah, blah based on approval, da-da-da. Buyers are not required to use the FMZ team at Cross Country Mortgage, but they can contact them. They're open 7 days a week, 8 a.m. to 8 p.m., and this is the number. What I want you guys to understand about if we're fortunate enough to work with you or continue working with you is that this is a constantly evolving thing, okay? We're listening to you guys, and my team meets once a week with the only topic on the table, what can we do for our realtor customers to better serve them, okay? That's where this referral engine idea came out a year ago, and it took a long time to put the pieces in place so that it's done right. That's where the condo approval came from. We're getting a lot of condo issues. How can we get ahead of it? We're always trying to grow and evolve and better serve you. This is not a stopping point. If you get on this train, we're going, all right? So the referral engine, the goal is 3 back to you for every 1 you give to us. You send me 5 over the next year, and this is a complete disaster, and instead of 15 back to you, I only send you back 6. Is 6 better than none, right? You're working with a lender who has a goal in place to grow your business. A lot of you guys work with a lot of great lenders. I know them. I have lunch with them. Brady, Brenda, Diane, Tom, all the guys. We know them all. The question I want you to ask yourself is my lender even trying anything to grow my business? Or do I want to work with someone whose focus is on treating me like a customer to grow my business? Looking ahead, in development, we're working on a bunch of AI-driven tools with developers to help you grow your business. Not cross-country mortgage. Me, my team, offline with a development team. Would you like a tool, and it's based on all the questions I get asked when I talk with you guys, okay? I don't know when this is going to come out, but I'm working on it. It's not going to come out till the kinks are worked out. Anybody can go online and get a valuation. Zillow, Redfin, blah, 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 right? Type in a property address and it'll tell you it's worth $1.2 million. Generally, that's based on maybe what the market will pay for it. And that kind of valuation sucks in this market. It's great in cookie cutter, Arizona, or somewhere like that where everything is exact same, but we have unique properties here. It's very tough to trust those things. So somebody wants to make an offer, and the question is, will it appraise? I'm involved in one of these right now. So what do? I go online, and I look up comps using a couple of different sources that I have, and I look at this the way that an appraiser would, not the way that a realtor would. I love you guys, but it's not price per square foot. Trust me, okay? So I look at it the way that an appraiser would. The neighborhood, when did it sell? Is it an eligible comp based on the size? We're offering on a 3-bedroom, 2-bath at $1.5 million, and I get told that we should have no problem because a 6-bedroom house up the hill sold for $3 million. And this is way nicer. It's so much cuter. I'm like, okay. So I look at it like an appraiser would, and I give you a kind of an idea range, okay? So I've been working with developers with actual appraisals, and what the conditional adjustments are, inputting a value on a property, putting a target price point, and getting a grade, green, yellow, red light of, do I need an appraisal contingency or not? It's never going to be 100%. It's never going to be bulletproof, right? But it's going to tell you why. And it's not going to just tell you the property should be $1.6 million. It'll have the comps listed, and it'll have the adjustments based on appraisal adjustments, okay? So when it comps all those things, and I'm working with one of the best appraisers I know to develop this thing for you guys, would that be helpful 24/7? You're thinking about what to offer, you go punch it in and say, yeah, that should be a green light, go ahead, waive appraisal contingency, yeah? Yeah. All right. Ah, shoot, I'm supposed to get you to say no. Would anybody object to having that tool? All right. So that's coming, plus a bunch of other tools. We're working on a portal for you to log into and be able to see all of the clients we're working with, what their status is, where they are, pre-approved, application submitted, in contract, file completed, closed 12 months ago, trying to automate as much of this and make this as convenient as possible for you guys to have your whole pipeline looking in one place. When we get a referral from someone that you guys have referred to us, you're going to get a very templated email saying this is the referral source, this is the referral, and this is what the situation is. We rolled this 2 months ago, and we've managed to get a bunch of listings and a bunch of buyers that we could feed back to the agents who have referred us business. And we're just getting started, okay? So I'm excited that you guys are here. I'm thrilled that you came, and I want to share with you one last thing. Does anybody have any questions on any of that before the last thing? Laura, will you bring me up one of the books in the box underneath the table, please? So this is something I'm excited about. I'm huge into growth, learning, all that gobbledygook, airy-fairy stuff, okay? Intention, manifestation, all that. So, and I just don't believe in coincidences. And there was the greatest couple who I was introduced to not long after the financial crisis. These guys were living a charmed life. They timed the market perfectly every single time. So in one of the few times where prices dropped in the Bay Area, they bought. Young couple, no kids. One's at Salesforce. No, it wasn't Salesforce that. It was another tech company, but she ended up at Salesforce. But the other one's at Google. And we got them a house, and a couple of years later, they sold in the frenzy and bought another place and stepped up because now they had a child. A couple of years later, I think it was another wave of frenzy, and they again sold and stepped up again and bought another place. And then they used me on a transaction to buy their second home in Tahoe. And their assets, portfolio, real estate, everything just was growing every time I talked to them, and they were the nicest, sweetest, kindest people. I'm sure we all have stories like that. And then they called me about, I don't know, 6, 7 years ago and said, we're out and we're selling our place and cashing out. We're going to keep the Tahoe place, so we're taking our kids, we're moving to Spain, and we're going to raise them on the beach in Spain and changing our lifestyle. We're out of the rat race. No more tech for us. I said, more power to you. Hallelujah. No two people wouldn't deserve, no two better people to deserve that. And that was, I thought, the last I'd ever hear from them. They paid off the Tahoe house and all that stuff. And then we got a loan program where, I'm sure you guys have all seen it. Everybody has it. They market it. You can get like $15,000 credit for closing costs in the right census tract and all that. And so I blasted it out to my clients and to you guys saying, do you know anybody who might want to take advantage of this? 3% down, no mortgage insurance, et cetera. And they replied to me and said, this is great. Can I put this on my website? And I'm like, what website? I thought you had retired from technology. And it was great to hear from them. So we got on a Zoom meeting together. So Ricardo was one of 8 kids, born in South Africa, literally on a dirt floor hut situation. And he pushed himself and educated himself and got himself all the way to where he is now, through education and belief and all of that. And once he got to Spain and had a minute to recollect and look at everything, he asked himself, when I look at all my siblings, I'm right in the middle. How come some of them are still on that dirt floor in South Africa? How come some are at some kind of middling jobs? Some have done better, but nobody's done, I'm clearly, as far as success and finance and everything else, I'm way out here. What's the deal? And he realized that what he had the courage to do was to dream it, whereas the other ones had not. And imagine it, and just make it so. And that's one of the hardest things about getting out of the cycle of poverty, is just believing that it's even possible, whatever it is that you're dreaming, giving yourself that courage to be able to dream it. So now he's dedicated his life to working with the underprivileged and getting them to make these dreams and make them possible. And I was just like, on this Zoom meeting, I'm like, this is amazing. So they walked me through these journals that they've created for different people. There's one for men, one for women. I said, I would love one of these for my customer, the real estate agent. So we put one together. This is a 12-week guided journal that we call Becoming You. You're welcome to grab one here, or if you want one, just give Laura your info and we'll send one to you. And there's a little intro by me, but this is Ricardo's handiwork. I didn't write this book. So every day there's this check-in that you do with yourself, okay? And it says, how do I feel today? And there's a bunch of options, everything from positive, happy, grateful, content, to stressed, frustrated, sad, overwhelmed, restless, bitter, shocked, guilty, unsure. Just check in, and then you say, why do I feel that way? What can I be grateful for today? How did I spend my life force today? And life force is not the activities that you did. It's where did your energy go that day? I know today when I fill mine out, it's going to be this. I've been freaking out about this presentation for weeks. My awesome coach back there, Susan Jane Harrison, has been working with me to prep for this. And this morning when I woke up, I said, I'm not doing it. I'm not going to stand up in front of all these people. So I'm very happy that I did. And affirming the good things in your life. And then you have a place here where you can dream and create vision. And then at the beginning of every week, there is a exercise, okay? So making adjustments, setting goals, filling your bucket list, all that kind of stuff. After 12 weeks, I guarantee you, you're going to be different. I don't know how different. It's going to be something. It could be dramatically different. It could be a little bit different. You could be a little bit more navigating with the compass. But I found this to be incredibly valuable. And this is his website. It's called Mind Shift. Create the life that you want to live. They have journals, courses, coaching, all kinds of stuff there. Incredible couple. And so they sent me this, and I loved it. And I've been giving these out to people. So you guys are welcome to take one off the back table. And if you want one, again, like I said, just let Laura know, and we'll send one to you if you want. So with that, this concludes this. Was this valuable? Yes. Okay.